Crypto is not that complicated. If you don't need a 10x in a month, and if you don't want to get the exact bottom and the exact top of every cycle, if you're okay with just above average gains that are reasonable, then riding the cycles is pretty straightforward. And I want to share how in this video. There are plenty of models that are incredibly useful to time the cycles. They show us what are the long-term holders doing, they show us what is the short-term money doing, they show us what are the smart whales doing. And with that data, we can imitate the good performance as well. For example, this here. This is the coin days destroyed of Bitcoin. It's one of my favorite indicators for BTC, and whenever this flashes red, I tend to risk off. This was the reason why I sold some of my Bitcoin at around 72k to then afterwards buy back in later at around 55k. Now, what is coin days destroyed? It's a measure that we can only calculate for assets that are on-chain. So where all of the transactions are 100% transparent. Because what we're doing is we look at all of the Bitcoin that have ever moved and we check what are the dormant Bitcoin doing? What are the Bitcoin doing that usually don't move? So say you hold one Bitcoin and you don't move that Bitcoin for 1 year. And after 1 year, you decide to move it, then you're destroying 365 coin days. If you hold 2 Bitcoin and you don't move them, say for half a year, same thing, you're destroying 365 coin days. So it's always about number of Bitcoin times the dormancy. So the bigger the wallet is, if it's a whale that usually never moves the Bitcoin, suddenly starts moving, that's a potential opportunity to sell as well, right? When the diamond hands turn to paper hands, when the diamond hands suddenly become active, that's a potential time to be more cautious. And it doesn't necessarily help us to always identify the perfect top, but it definitely is a good way to at least consider de-risking somewhat. Instead of looking at the entire history of Bitcoin, we can just look at the last 90 days. And again, this tends to peak whenever the Bitcoin price peaks as well. It also peaked recently over here at around 100k. This is where I sold pretty much all of my speculative Bitcoin. But interestingly enough, it also peaks at the bottom of a bear market. So when Bitcoin moved from 20k all the way to 3.5k, a lot of people sold over here. They completely gave up. In other words, when this is spiking, it can simply be a measure of when the current trend turns around. When an asset changes hands, when it moves from one investor to the next, then the reference price of the market adjusts. So say you buy a Bitcoin and then you look at the price development from that purchase point. You will always look at the current price relative to when you bought it, right? Are you currently in the negative? Are currently in the positives? And of course, this reference price has an impact. If, for example, you believe in Bitcoin very, very long term and you're currently in the negatives, you might just continue holding. However, if you're currently massively in profit and you started out with maybe 10% of your money being in Bitcoin, and suddenly Bitcoin 5x'd and you've got 40-50% of your money in Bitcoin, you might take some of that profit and reallocate this to other asset classes or just use this for consumption, right? You want to have somewhat of a healthy balance. And so when a lot of Bitcoin change hands over here, this means that more people have their reference price at around $4,000 and they might not sell that quickly anymore. The reference price is declining when trading volume or coin days destroyed peak at the end of a bear market. Now here are the coin days that are currently in profit and in loss. And we can see how this tends to decline when we are at the end of a bull run. In other words, long-term holding tends to go down and a lot of short-term holding enters the market. There's less and less coin days. A lot of coin days got destroyed. But then we also see how much of all of supply is in short-term holders' hands and how much of the long-term holder supply is currently in profit or in losses. So in profit is in dark blue, in losses is in light blue. And let's normalize this now to 100%. And that's then what we get over here. And isn't it interesting how at the bottom of a bear market, it seems to be the same fraction of long-term holders roughly that are in losses. So especially 2019, the COVID crash, and the recent 2013 crash. It was always around 13% or so of long-term holders that were in losses at the time. This was the best time to buy. And what we also see here is that over time, the short-term holders are less important, as in the vast majority of Bitcoin is held by the long-term holders. Doing what the long-term holders are doing makes a lot of sense. They dictate where the price is going. When the long-term holders are taking profit, it's time to take some profit as well. Now, here's the thing. If you're a beginner to investing, you might work under the assumption that it's possible to time the bottoms somewhat well and to time the tops somewhat well. And while those instruments that we just looked at are pretty useful, they're not perfect. So what I personally do is I don't try to put in 100% at the bottom and sell it all at the top. I'm simply working with weightings in a portfolio. So when I think that overall we are rather cheap, I want to be over allocated. I want to have maybe 50 or 60% of my entire net worth in Bitcoin. If we are currently rather high, I want to have much less of my net worth in Bitcoin, maybe only 10%, maybe only 5%. So you can simply just wiggle around with the weightings. If it continues to go up when there's only 10% in Bitcoin, still fine, we still make profit. If it continues to go down when we are relatively cheap, also okay, we can potentially allocate more. So we try to never be 100% allocated. What that also means is that we can take advantage of those intermediate ups and downs, right? We can simply just rebalance our portfolio quite frequently. So let's take the following. Let's say you take this indicator here, the CoinDays Destroyed RVT indicator. It tends to top at similar levels. It tends to bottom out at similar levels. And interestingly enough, there is an inverse correlation between the two. So when this is very high, the Bitcoin price is low. When this is very low, the Bitcoin price is high. What does this now mean? If we just take this as a trading range, what we can do is we can sell whenever this is low, we can buy whenever this is high, and we can just reallocate maybe every few months based on where this is in this trading range. So as we are declining, we're selling and selling and selling, and then as we go up, we tend to buy and buy and buy. It's simply just a measure of how much of our overall target allocation we want to have in Bitcoin. So when this is at a peak, maybe we want to have 40-50% of our net worth in BTC. And when this is at the bottom, maybe only 5%. And when it's somewhere in the middle, maybe around 20-25%. And that way we are somewhat agnostic to the movements, right? We're simply just betting on this model to continue working to a degree. Now, no model is perfect, but a lot of models work quite similarly. So for example, over here, this is the realized HODL ratio. Also, again, an oscillator between green and red. And we want to buy when this is low. We want to sell when this is high. And even if we don't hit the red area, right? Like for example, here in 2021, we've never hit the red area. The same for here in 2024, when Bitcoin hit 100K, we still would have taken some profit, right? Because the idea is that we want to be 100% with our target allocation allocated in the green area and much less percent when we are in the red area. But we're already taking profit as we are approaching the red area. This is how we can take advantage of those cycles. Again, the only important thing is not to be greedy, right? We don't want to necessarily buy the perfect bottom and sell at the perfect top, because if we do that, we might miss the top and then completely lose out on a cycle. It's more about rebalancing as we go, because then we buy more and more as Bitcoin becomes cheaper and cheaper, and we sell more and more as Bitcoin becomes more and more expensive. We should have already sold a lot at 100K. Again, this is what I personally did. This is also what I told my premium members to do, so feel free to check that out. It's down below. It's thebitcoinstrader.com. And according to this indicator, we might add some Bitcoin as we approach closer and closer to green, right? At green, we want to be 100% allocated. Currently, I rather bet on falling prices. Again, the momentum is negative. And in the past, whenever we hit those tops, we tended to go all the way down to green. Here's another similar indicator. It's a bit more erratic, it's a bit more risky, and it only peaked in 2021. It didn't peak in the recent years, but at least it gives us good entry opportunities, right? Whenever the current price is below the realized price, whenever the market value to realized value Z-score is in the negatives, that's when we want to buy. So an easier way to look at this is here. This is just the Bitcoin realized price. So the average cost basis of the market. What's the current reference price of the market? When the market as a whole is currently in negatives on average, we tend to see how the selling pressure goes down, how people rather tend to dollar cost average into Bitcoin. That's really when we want to buy. Currently, that average cost basis is at 43K. We can also be a bit more conservative. So this is the long-term holder market value to realized value Z-score. Again, at the end of a bear market, we tended to be very close to that price. That's now at 26K. Now, I do think it makes sense to buy into Bitcoin already before we hit 26K. Nobody knows if we're actually going to be there at some point. But yeah, this is the potential risk we take when buying now, right? We want to be prepared for a drop like this, potentially even make money in case we drop like this. That's what I'm personally doing. It's all about being maximally deployed when the market is in complete apathy, when nobody wants to hear about Bitcoin, when people talk that Bitcoin is a scam. That's when you want to buy. And you want to sell when the other whales, when the other long-term holders are selling as well, and when the Bitcoin value that is destroyed turns red. Now, when things don't look that great, when most altcoins are going down and when they especially underperform versus Bitcoin, I think actually it's time to make money. It's not time to exit the market. This is what most people do. I think that bear markets are actually the easier markets to make profit. Because have a look at this screenshot here. This is a premium member that shorted a token with a modest leverage of 3x and that made 25%. This is his message, tagging me, I made my first profit, thanks. I'm not sharing the exact asset because we are still betting on falling prices of that asset. Again, there are some very weak altcoins that sometimes pump that we can then short, where we can make very easy profit during times like this. Most altcoins are now deflating. It's an always repeating story. What we've got over here is XRP relative to Bitcoin. So this is a relatively long-term chart starting in March of 2021. And whenever we see positive news, when all of attention goes to XRP, the price is rallying, but then sooner or later we do get our crashes. And it's relatively straightforward to make money with those crashes. We're simply looking at what currently pumped a lot, where didn't we see any new all-time highs, but where are we likely going to stay in the trading range, and then we just bet on falling prices. And especially when there's currently a bear market, when a price relative to Bitcoin goes down by 74%, we can make more than even just 74%, right? We can lever this up slightly as well. Or have a look at Dogecoin, right? The same story. Elon Musk tweets about Dogecoin, it goes up, and then afterwards the attention moves to the next token, and we just see a continued price decline. This is again 74%. We made money shorting Dogecoin, by the way. So I'm sharing all the trades that I do betting on falling prices with all the premium members. There are also alternative ways where we don't have to be that active, right? There are some altcoins that are that bad in tokenomics, where the supply is increasing that quickly relative to the demand, that the underperformance relative to Bitcoin is pretty much just a straight line. So what we've got over here is Balancer relative to Bitcoin, and it simply just continues to go down. Now, the reason why I'm sharing this position here is because the tokenomics aren't as bad anymore compared to a few years ago, right? I was shorting this throughout the whole of 2024 and I've closed that short now. But the reason why charts like this exist, the reason why we can make money with this, is because the supply increases over time. But this is now Balancer, and a year ago we saw how the circulating supply would still go up by like 30-40% within a year. This is not anymore the case. So relatively speaking, Balancer doesn't expand that quickly anymore. That's why the underperformance is slowing down. That's why I'm now sharing this publicly on YouTube, right? I didn't share this on YouTube in 2023 and 2024. This is where I only shared this in premium. We really have to be realistic about the market. I believe strongly that the long term wins the game. It's always about being consistent. It's always about beating the market over the long term and have proper risk management. Making money in crypto is not just about finding the next 100x meme coin. That can work with a lot of research during a bull run, and when we've got a lot of influencers that all coordinate each other that then push up the price. But in a bear market that doesn't work. When there's no new investors joining, that's not the way to make money. I mean, just have a look at this. This is the top 100 tokens. And what we've got over here is Bitcoin, and this is ordered by the performance in the last year. We've got 16 altcoins that outperformed Bitcoin in the last year. 2 of those altcoins, by the way, are gold derivatives. So this is just the gold price going up. So in the end, we've only got 14 out of the top 100 cryptocurrencies that did better than Bitcoin. The vast majority of altcoins did much worse than Bitcoin. And that happened during a period where Bitcoin actually went up. Bitcoin during the time period went up by 25% almost. This is something most people don't understand. Most people think that when Bitcoin is going up by 25%, that the altcoins in theory should go up even more because they are smaller in market cap, they are more volatile, they are somewhat of a levered Bitcoin, but that's only true to a degree. Bitcoin can go up by 25% in a year, and still the vast majority of altcoins does worse than BTC. So instead of trying to find the next 10x meme coin, when it's all just player versus player and when no new people enter the space, instead of trying to beat the impossible game, why not get the odds in our favor, right? When more than 80% of altcoins in the top 100 do worse than Bitcoin, why not bet on that? Why not bet on the 80% doing worse than BTC and make money with that? That's personally what I currently do, and that's also what the premium members are doing. That's how short-term gains like this happen, while the vast majority of people are just losing. Now, I have not seen any other influencer being that transparent about their own performance, but I want to share what kind of performance I make, and I also want to share this over time, as in not just I have made X%, but I want to share how volatile the game actually is. Crypto trading is a game of both luck and skill. And the longer we are engaged, the more trades we do, the more the skill component will be stronger compared to the luck component, right? It's pretty much like in a casino. If you play versus a casino over the long term, you will lose money. You might win money short term, right? Because the luck is on your side, but over the long term, the odds, the expected value is what plays out. And so what we see over here is a scatter plot. How much did I outperform buying and holding Bitcoin every single month in the last 3.5 years? Some months have been incredible outperformances over buying and holding Bitcoin, right? The very best month was over here with 25% outperformance, but we also had pretty poor months, like over here, an underperformance of 18%. So the thing is fluctuating. What we've got as a dotted line here is a 12-month moving average. Most 12-month averages have been positive. When we average out all of those data points, we come to 2.1% per month. So in other words, on average, I make alpha over buying and holding of 2.1% per month. So when we compound this, it's a bit over 25% per year. Now, is this enough? Depends on how much you're betting, right? If you only have $100 to invest, it doesn't matter. But if you've got $10,000, maybe even more than that, it does matter, because again, this comes on top of Bitcoin's performance. And so here's what I believe Bitcoin will do over the long term. Instead of just looking at the direct prices, I prefer to look at the realized price, so the average cost basis. Over time, the current price is hovering around that realized price, like the average cost basis, but the cost basis itself tends to increase quite steadily. And this increase over the last few years was roughly 25% per annum, 30 to 25%. I'm rather conservative, I say 25%. So we've got a bit over 25% per annum from trading. We've got a bit over 25% per annum from just buying and holding Bitcoin. So compounding this again is more than 50% per annum. If you've got more than $10,000 and you put this into 50% per annum long term over the next 3-4 years, that kind of money does matter, right? Isn't that better than trying to gamble it all away with meme coins? Meme coins are ultra risky, and that's why most people just put a few $100 in them, maybe $1,000 here and there. But if you've got a strategy that's somewhat limited in risk and where you have a long-term track record, then putting in more money, allocating more of the overall wealth towards such a portfolio does make sense, right? Then we can play in the tens of thousands, maybe even hundreds of thousands. We don't have to just bet $100. Now, everything I've just explained is in more detail in the premium membership in the tutorial section. There's more than 100 premium tutorials in the membership, and it's not just about shorting, it's not just about betting on falling prices, it's also about risk management, about asset allocation, about on-chain analytics, etc. Besides the tutorials, I also share, of course, what kind of trades I do so that you can simply just copy trade me, right? You don't have to go into every single altcoin in detail all the time. I dare to say that most crypto communities probably lost money in the last few weeks. And I don't think that's true for the premium membership here. I do believe that the vast majority of our members made money because we were prepared. So feel free to check it out. It's currently $125 per month. There's also a 1-week money back guarantee. So in case you don't like premium, just message me within the first week and I refund you 100%. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. Helps the channel grow. See you again on YouTube or see you in premium. Cheers!